Okay, guys, can everyone hear me okay? If you can't, one of my coaching clients should just hit me over Skype and let me know. Hold on one second. We'll start in just a minute. Okay, so at any rate, we are going to get started here. Sorry, hold on, Daniel, see if I can hear. Okay, great. Thank you, Daniel. So I just wanted to take a quick look in preparation for this afternoon as to what to expect in terms of range expansion and what happens before and afterwards, right? So generally speaking, again, I want to emphasize, I don't trade a lot on Fed days. And there have been times in the past when I wish I simply had not. And the majority of inexperienced traders that I speak to, the vast majority of them, I want to emphasize, have actually ended up having big down days on Fed days, not the big up days they had hoped to have. And there is several reasons for that. Well, let me make sure I got the recording in on this one. We do. Okay. There's several reasons for that. One of those reasons is first from a psychological standpoint. The increased volatility in action really appeals to, if you have any kind of gambling or action kind of a personality, it really appeals to those traders. Secondly, and probably more importantly, the large players, meaning traders that have time frames other than the intraday time frame, right? Hedge funds, mutual funds, retirement funds. Those guys do not care that if we have a support level or do have a support level. Prior, sure, the support levels hold, but afterwards, particularly in that first 10, 15, 20 minutes, and zones mean nothing and they can get blown right through in a very harsh way. So one of the ways that I'll go through some of the ways that I compensate for that and some of the areas in the past that have worked, and also look at some of the head fakes that occur right afterwards, right? So why don't we just start going backwards to forwards. I had started, I believe this is, let's see, June, May. So this is May 1st right here. And first, let's get the time zone started. This is 1 o'clock, so this is when it was released. Let me see here. Here we go. Oh, excuse me one second. I'll take care of that, guys. I apologize. There we go. She stopped. Oh, no, she didn't. Out in the backyard she goes. Hold on one second. Again, I apologize. Hey. I apologize, guys. So as you'll see, right prior here, look at all I look at is starting at the ranges, right? So I see that we traveled primarily 51-ish, right back to 51-ish to 67. So that right there, this little rotation that looks so small, right? That's 17 points. Even if you thought this, let's say you thought 65 was a good rotation up, right? Also, look how fast the rotations are. This is a 5-minute bar, right? If you shorted 66, right, it rotated all the way down to 62, quick 4 points, right? But if you didn't take your money quickly, the next thing you know is you were staring 68 down, 67, right? And most day traders end up taking this as a loss, right? So just, first of all, you got to get your mind around the scale. Secondly, if you get this wrong, this rotation from 67 all the way down to 50, well, let's see what we're going to call it. Excuse me, I got this wrong here. My eyes are going bad. I'm going to get this done correctly. So this is a rotation. Let's get this right again. 61 up to 68. From 68 all the way down to 58, okay? That's a 10-point rotation, relatively docile, right? If you look from the high of the day, we had a high of 70 to a low of 58. That's 12 points. That's a normal day. Relatively easy, and a rotation of 8 to 10 points actually sets you up fairly nicely. what I did want to point out is right after it's released, however, look at this, from 56 down to 52, back to 58 in fairly quick fashion. And this is whipsaw like this area right here is what causes big losses. Also, another thing that causes losses on these days is you think you've got the low nailed, right? You get in here and you don't scale, you don't take your profits, because a lot of times we think we got a 20-point move coming for us. If you don't scale, you don't take your profits out, you could have easily found yourself out with a trading loss instead of a trading gain. Also, let's just pull this in real quick to get a bigger picture of what it looked like. Remember, this is fairly docile environment. We had pretty much the Fed saying that they were going to keep interest rates low no matter what heading into this meeting already. So if we look prior, just to get a quick scope of it, you can see we were at a high. We had a small pullback. Obviously, we took off after this in the days following. And importantly, heading into this meeting, there was just absolutely no real damage there. We were slightly below, right? We were slightly below the trend line, but nothing dramatic. We were overall in an uptrend. So that was the net result. We didn't go back up to the highs, and we barely penetrated the lows, and we were still in a series heading into that of higher highs and higher lows all throughout. So this wasn't anything severe other than a pullback. Fine. So let's go to the next date, which was June 19th. Again, there's not any major revelations here. It's simply to go over what happened previously, and so that we have a view of what the possibilities are, and we get an idea of how to set up our own trades so we can scale appropriately and so we know where to enter, right? So here's quite a different picture on June 19th, right? Here's the, there we go. Here's the 1 o'clock release. Okay, so we see in the first couple of minutes, right, the first 10 minutes, we traded from 1635, essentially, let's call it, all the way down to 1623. That is a, let's see, 34 to 23, that's a 11-point range just in the first few minutes. Okay, so this is highly dangerous. It's a place where a lot of people lose money. I guess if you had the hope of you were going to nail the high right there and you had a reasonable stop, that's fine, but I just don't know many people that can pull that off successfully and know that they have high odds going into it, right? Same token, once we broke below the intraday low, you can see that that wasn't if this is a high odds trade, right, and you say, oh, I got this, right? Well, then why wasn't going long here a high odds trade as well? And as it turns out, it was. Look, you actually made profit. The problem was you had to write it down from 28 all the way down to almost 22, 23, 5-point rotation down before you got a rotation up. All the years I've trained short-term traders that trade with leverage, I know maybe one or two that would have written this down, and it was only for luck that it just doesn't fly straight down, right? And again, look at the rotations. Again, 23 all the way back up to 32, 9-point rotation up in a very brief period of time. And if you look, these are 5-minute bars. If we went through 1-minute bars, these whips are much more severe. We went through almost an entire hour where we whipped basically from 24 all the way to 32, 8 points up and down. And this right here is just a huge formula for having your butt kicked. Losses rack up really, really fast in this scenario, right? If we look again on top of that, right, we rotated this time from 32 all the way down to 14. So from 32 to 14, what is that? 22, almost 18 points, right? From 18 points, we had a rotation from 14 up to 23, another 9 points up, right? Followed by a down of 22 down to 10, another 12 points down. So on this day, let's say we had used the scales that I was talking about, meaning doubling my minimum entry, meaning I need 12 points of rotation from whatever the swing high was to get into this trade. Let's see how this would have looked in terms of trading, right? So we were trading right here at 1630. There was no entry here whatsoever. From 1635, let's call it, that puts me down to 1625, which is right here. 1625 puts me down to 1623. Almost there, 12 points. snagged me a very nice trade to the upside, actually, right? From 1623, I need back to 1635, 12 points. If you even want to do it on a minimum of 10 points, you were fine. But 12 points would put us right up here at 1635. There was no fill on this one. Here's where I use the double, right? 12 points down from 1632 got me 1620, right? Which got me just in time to get run over. However, if I use my 20-point scale, right? 1633 from 20 points puts me down at 1612. And if you look at 1612, about 2.5 points of stop, 3 points, kept me in this trade. The problem was it came at the end of the day and there was no rebound. The point of all this isn't to show, hey, I'm not saying it's not tradable. What I am saying is it's damn hard and you have to figure out what the scales are really quick. What I definitely am saying is 6 points is not enough of a rotation to get you paid. And I'd be pushing towards that 12, maybe 10 points at a minimum. And I would rather miss all this than get steamrolled in something like this, because more likely than not, it's very hard to tell when it's going to reverse. It goes so fast. Let's go over here and look at the 31st. And if anyone has any questions, by the way, I can pause. There's a little question thing. Let me move this over. If you just click on that, you can type in I'm not in a rush, so I'm more than happy to respond to the questions as they come. Let's look at the July 31st meeting. Let's trash all this. Okay, so here is our 1 o'clock release. Okay, within moments we travel 77 all the way down to 68. We almost have a 10-point rotation down from high to low. And when the news originally came out, we traveled from 72 to 78, only 6 points, right? But look at the speed, and then what you also don't see is the whipsaws within the 5 minutes. So keep that in mind as well. We then, right, unlike last time where we rolled down, up, then rolled to the downside, here we are rolling all the way up to what appears to be 1683, I want to call it, right here. So we have a rotation from 1668. We have 12, 13, 14 points of rotation up here, right? And from 14 points of rotation up, we then proceed to roll over from, let's call it 83, all the way down to 68. We can all see that right here, right? And what I'm trying to get across, and I'm not sure that I'm doing such a good job of doing that. Hold on, I got some questions here. Okay, what I'm trying to get across here, right, is this move here. This is hard to pull off, right? Gotta remember, what's our environment where we usually make money? 1 to 2 points of trade, right? And 1 to 2 points of rotation is what we're looking for. Everything else is trailers, right? But our normal rotation is 6 to 10 points. It usually sets us off really well. This move here from, let's call it 83, so I don't have to go into minute details, 83 all the way down to 88, that's 15 points of rotation down and straight down. If you miss anywhere in here, right, you said, okay, I've got 10 points of rotation down right here, all right? Okay, first of all, most people when they're trading this environment, they're thinking more than 2 points. So if you nailed 83, 10 down, right, you did get a nice rotation up. But if you weren't Johnny on the spot, you got murdered on the downside, right? Also, interestingly enough, the trap trade did work. Notice how we set a low, broke below that low, then closed back above and backside tested it here. Can you see that? And you have to be pretty quick to catch these, okay? Broke the low, came back up inside, and backside tested, right? That's actually a pretty good trade. It's a trap trade right there. And you'll see that it rotated us up from 68 back to 72. Again, I think the risk is enormous on all these trades, and I have no idea what the percentages would be in terms of success. Generally, I want to see a possibility of tick divergence, but even on a day like today, tick divergence can get run over. So I know that's not overly popular. Everyone wants to trade the big trade, make a lot of money. You'll also notice on this side too, right? Here was prior day's low, right here. So the trap trade took place repeatedly. We broke out, we closed back underneath, right? We had a quick test to the upside, backside test, trapped. We traded the other end of the range, right? The other end of the range at this point is all the way down here, broke below, closed back in, trapped, and then we traded back up inside for the close. I imagine overnight we probably traded right back up here the following day. Let's look at what this day looked like in context again. This is purely in preparation, right? Okay, so you can see, even with the downside, look, going into it, we were going through a series of higher lows and higher highs consistently through this process, right? Right up until this date. And also notice a lot of people got suckered in when we broke to these new highs here. You had to think we were on a rocket ship straight up, right? So this is probably pretty jaw-dropping for people who trade, for people who chased on either side. Okay, so the only thing I'm trying to accomplish is awareness here. I don't have a specific trading strategy other than being stretched. I'm generally looking for a minimum of 12 points of rotation. And if you look, if I had done that, right, 83 brings me to 73, right, which brings me to 71. And even if I took the trade there, I still had to survive 3 points of rotation lower. And what I'll most likely do to try to survive these trades, if I take them, is I'll probably cut my trade size either by half or 3/4 and widen my stops, right? But you'll look on most, if you look at how we make money on most days, right, this is perfect. If you look, if we open here at 76, right, 76 down to 60 brings us approximately a 6-point rotation. We get a 2-point rotation up, we make our money, right? If you look again, we come from 72. Again, we have no ideas what the zones are, so I'm just trying to contrast a normal day versus these days, right? 72, we take a 6-point rotation down, brings us to 64, right? That takes me right down to 66, which fits me right here, okay? A little bit of heat behind it, but I get a 2-point rotation up, and I have a nice trailer to boot into the close. So, and then the next day, obviously, we ran really nicely. So comparing these days where it's really quite easy to get the rotations, as long as you get the trade location, the zones right. Obviously, we don't have that advantage here, right? With the rotations, most days those rotations are going to pay really handsomely. On these days, you can see it's really easy to bury yourself really, really fast. I would recommend lowering trade size if you're going to trade it. Let's go look at the prior day now. And again, I'm just going to do this for each and every one of these days. No one has to stay on. It's a little bit rote, but this is what I do to get prepared. And what I've noticed in getting prepared to go into a difficult situation is the more you look at the small elements that have taken place before, the more prepared you'll be to recognize those elements when they're taking place in the heat of action. If you're going to wait and judge it off of the price action while the market's flying, you're going to have a very, very difficult time getting good trade entry. And these are going to be one of the days where you can get the trade right, meaning make the right call, and still lose a ton of money getting stopped. So this is how I do my preparation. It's a little rote, it's a little boring, but it consistently keeps me making money, and it consistently keeps me entering trade locations where day after day, no, I'm not always getting 10 and 12 point or even 6-point rotations, but I'm constantly hitting 2 points, and I'm hitting it with a lot of size. And it's made me a tremendous amount of money. So at any rate, just wanted to kind of give that warning. That's where we're going with this. Let me trash this, go to the next day. Let's go look at September 18th. Okay, example here where I was actually long on this day. I remember this quite well. I was long. It's adjusted now, but if you'll go back and look at this day, I called the long here. I scaled 2 points right here, and I had a stop right back here, and I just got lucky. I actually exited very early on this. I took my long out basically for 12 points and thought I was a guru and left another 12 up. So I'm sure everyone remembers this day. Here's the problem with fading, right, or trying to hold. If you try to fade after a 10 or even a 20-point move, right, a 20-point move actually got you profitable, but anything less got you stopped consistently in all of this. And even then, you had a pretty Johnny on the spot, because eventually, obviously, we went for more than 25 points. As a matter of fact, from the lows, we went for almost 30 points of rotation from here to here. If you can figure this out after the news, the only way I got a piece of this was because I was in the trade before it launched. Fairly pure and simple. Let's take a look at the context going into this. I think it's going to look similar to the others, but we will try it anyways. Okay, so this is that we were just in a straight up market, right? So fading that obviously may have not been the best idea unless you were just going to take a shot here and take 2 points and take a loss right off the top. I mean, this was just volcanic the way it went. Let's trash this here real quick. Obviously, same pattern we've had all year. Higher lows, higher highs, fat channel going up. This was a hard short. I don't know what people were thinking. Well, what people were thinking is they were anticipating a break, right? That never came. And you'll notice in all of these, all of these we had higher lows and higher highs. I think that's been consistent all the way through here. And we're breaking down really nicely, by the way, guys. Here we're down at 1773. And people are obviously nervous going into this Fed meeting, so it'll be interesting. Let me switch over to the chart, my main chart here real quick. Let's take a quick peek. Okay, so this is gap fill right here. We're right at fill. It'll be interesting to see if they get any responsive buyers, and then really need to hold here. And if you look at our rotation, we're at 78. 72 is really the first area that I'm looking at. And I'd really prefer into the middle to back of the zone or tick divergence. And I don't think we have tick divergence yet coming up on this. I actually do have a shot, but I didn't call it out. And I'm going to go ahead and cover a portion of it right here.
Order filled.
And so at any rate, the short I took was extremely aggressive. I called that out. I'm not sure if I called it out over Twitter in general. I did mention it, I think, in my on my private Twitter feed I have for my clients, that this was a good area if you were extremely aggressive. The problem with calling the trade out was that it required a stop here in order to make it work. As it was, it held, but I had no idea when I took it. So so that's that, and we'll just kind of monitor it. I'm going to move this over to my other screen so I can keep monitoring what's going on. And then let's look at the last couple of days here. I do not see tick divergence yet. I'll call it out if I see it develop on the chart. Let's see. Let's go to the prior day here. And this is last month, October 30th. And take a fresh look at this. I see what I did wrong. I didn't have it last day easily fixed. There we are. Okay, so actually October 30th looked very similar to today, right? Okay, so if we look, here's the 1 o'clock news release. First thing I want to highlight again for particularly my clients, guys, look at this range, 1760, right? This is 8 points of whipsaw. You nail this in just the wrong place, right? I mean, look at the ways you can think of it. You go, okay, well, if we break lows, right? If we break lows, I guess that would be right here. That's a sign of a break, and if you chase it into the hole, you got whacked, right? If you say, well, we broke the range high prior to the release, and you took a long here, you got whacked there too. I don't see any good way to enter this trade here. There's just none, right? So let's look at the rotation down from top to bottom. 1760 to 1750 to, let's adjust this screen and see how low we went. Okay, down to 1746. So let's see, 1760 to 46, almost 15 points rotation, right? So 12 points okay, got you within 3 of the bottom, okay, again, while I'm doubling it. And if you'll notice when we look over the past several trades, right, sometimes a 6-point rotation got you in good, sometimes a 12 got you in good, and on occasion you needed a 30-point rotation. The point I want to bring up to all of that is there's no way to tell. There's no repeated pattern in all the years I've been doing this. There's no way to repeatedly tell what is going to occur, right? If it's possible, if this sell-off continues here, is it possible that we take all the negative news that might be coming out from the Fed, right? That it's already going to be priced in and we counter rally anyways? I don't know. And the problem is that if you're not truly an expert at interpreting the Fed news, how do you figure that out, right? I use the same methodology I use to figure out whether I can hit a trade 70, 80, 90% of the time. Now, when I try to predict what the Fed does, I'm right about, or the reaction to the Fed, I'm right about 12% of the time would be my guess. If I flip a coin, I got a better odds of making it right. So in my opinion, I'm looking for tick divergence. I'm looking for big fat stretches, and I would rather miss it, right, than get run over by it. All I know is NQ's been falling out of bed for days. We're down near that. We're at 34.46 and a quarter. I believe I mentioned this morning that 34.50 was a critical area. It'll be very interesting to see what happens going into that news conference, right? And then, and by the way, it would be very interesting to see if we break this gap fill here. If we break this gap fill, that if we do it on tick divergence into 72.70. And then let's look at the last couple of days coming into this, right? Give me just 1 second. I forgot. Okay, so obviously coming into this, we have the exact same pattern we've had for weeks ahead of time, right? And there's still no. Sometimes this pattern of higher highs, higher lows, right, has developed. One time it developed a massive whoosh up to the upside. Another time it developed like this into a massive whoosh down, right? So again, I don't have a particular edge on doing this. My concern more than anything else is, particularly for my clients, guys, I want to protect your equity. You know, all of y'all have done extremely well in terms of making your P&L grow. And this is not the environment where we make our P&L grow really well. So here's the deal on this 5-minute bar here. If we can keep the ticks above 750, negative 750, which is what I have on TradeStation, I would have tick divergence, and it'd probably be enough for me to take a shot at least at the long side. I don't see it yet, and let me switch over real quick to the 1 minute. Let's see if we can do this live, see what our 1 minute chart is. Hold on, because this breaks up when I move these charts from what I'm told. I rarely do live, but let's see if we can do it live here real quick. Let's switch over to the 1 minute. What we're looking at on the 1 minute. Okay, so I see divergence possibly setting up. Technically, we had it here. If you look, where's my drawing tools? Here we go. So technically, we had it right here, right? You can see the difference. It's not a lot, but there's a small difference there. And we're getting a push right into 1772. And rotation-wise, at least 78 to 72, that's 6 points. Okay. And from the highs, we 78, 72, 71, 72. Let's see if we can't get them to push it just a little bit further to hold it in. But because they have tick divergence there, we definitely have tick divergence here. I want to cover the balance of the trade I had. Hold on 1 second here.
Order filled. Order filled.
Okay, so we're all done on that. So basically, you'll see we came obviously right into support at 72 even. Hopefully, we can get a little bit bigger push down, but you can see as we're making new lows, you can see here, clear tick divergence, right? I'm hoping for one more push. We may not get it. we've really pushed down hard. And then I want to take a quick look at NQ. So if we take a minute, I want to bring this over, hopefully. Okay, so I can keep up with what's going on over here. If you look, I published these earlier, right? And you can see we've been holding this trend down. We've definitely broken. It would make sense for us to come up for a backside test into this area before continuing down. And that would probably, you already have halfway there to your 2-point rotation. So again, emphasizing that trade location is incredibly important. And when we bring this and make it smaller, right, we can see that we have potential all the way down into this 1770 level. I'd really like to nail this 1771, and then what I would like to see going into the Fed, which again, this is a hard way to trade, right? But what I'd like to see is we get down, freak a few people out, then get back above 72 and push to 75 again, maybe even 76. That's kind of the roadmap I would look at. We're not quite there yet, and we could probably just take a couple of minutes here and see what happens. Let's take a look at NQ really fast, because NQ's been a weak sister all day. What has to happen there? So this is NQ on a daily, right? And I pointed out. So look how this pattern went, right? I printed this out this morning. We broke down. We came in for a backside test of this upside trend line. And again, remember on trend line, guys, they're only they're an indication. They're like white lines on the highway. People are supposed to stay in their lanes, but we all know they don't, right? So breakdown, backside test, and then further breakdown. And this really looks like an AB equals CD, so this may be the end of it. I'm trying to see if there's any support back over this. But 3450, this is a very important level on the charts, and we need to get above this 3450 to get any upside. So you have your eyes on NQ at 3450. It's about 6 points up from where we're trading right now. We have to get that 3450 to hold. So the way you can use that information is after the Fed announcement, right? If we tank down to 3420, and we're not even trading, we're just keeping an eye on it, right? We tank all the way down to 3420, let's say, and then we have a vicious rebound, right? And they bring it right into 3450, maybe even up here a little bit, right, like this. When we get down below and hold below, we need NQ in order to get ES to have a move up. You need NQ to get up, and right now you have to get above this trend line in order to do that. The other way to look at it, right, is if we do get back above, right, we break back above, we get a backside test. Oh, there may be a few questions. I missed that, guys. Sorry. Hold on a sec. Yes, on trap trade, shorts get caught. Shorts get in late shorts, or late sellers get in on a trap trade, or vice versa. Late buyers get in, you get below. No, I am not long yet. Whoever's asking me, I did not get long. Yeah, 70. Look, anywhere in the back of that zone that we're trading at right now, anywhere in the 70 to 72 is fine. Also, just so you know, the closer we get to that 1 o'clock, it's going to get fewer and fewer participants, and it's going to get harder and harder to make money. The only way I've ever survived those is gotten my scale, put a stop at break even, and crossed my fingers. It works about 1 out of 8 times. So no, I'm not long at all. I just covered my short is all I did. And it was a very aggressive short. That's why I didn't call it out. The parameters, you got to realize, I've been trading for almost 20 years now. Damn, I'm getting old. I've been trading for almost 20 years. I have a lot of trades in my, bag of tricks that I don't put out for everybody. Why? They have a higher level of difficulty to execute. Some of them require, sometimes it's only for 5 or 6 ticks. Sometimes it's just impossible to put it out there, explain what the hell you're doing, and have anyone understand it over Twitter. They're just scalp trades I set up. I can trade people how to set those trades up, but even in real time, unless I was actually on the phone with someone or in a live session calling out the trade, it's almost impossible to communicate what I'm seeing and get it to them quick enough so they can learn anything from it without doing a large amount of preparation beforehand. So I don't call out every trade that I do. Okay, so that's one scenario. We already know that this area, this 57, obviously is going to be important right here. This is where we failed. And then also we know the backside test at 3450 to 3455, this area is going to be important as well. Next, looking at, let's go and look at the other chart here real quick. Let's try this. Let's look at the, so we looked at the ES, we looked at the, did we look at the ES daily? Here we go. I put this chart out earlier over all the services, right? And if you see, we've been bound. We're now on the, okay, so again, I got to emphasize, I draw my support levels off of the trend lines and channels. I just look at them for guidance to get an idea. You'll notice there's a lot of times where we can break a channel and fall right back into it and travel all the way to the other side. So it's certainly a possibility that we just jump back up into this channel and travel all the way back. I will annotate it so people can see it. See here, we broke out of the channel, right? Looked like we were going to break out to new highs. We fell back in, backside test, traveled all the way to the other side of the channel. Only for overnight to come all the way back up. All we did overnight, right, in that huge move, all we did is travel to the top end of that channel. So all we're doing right now is traveling to the bottom end of this channel. It's totally conceivable, right, that we fall out of this channel, come in for this 1770 support area from yesterday, right, and then come back in and just get back over the channel with news and pop right back to the other side of the channel. That's totally conceivable. If you look at the distance, that's a 12-point range and totally viable prospect for this to happen. On the other hand, the other scenario that can take place with that, right? And again, I'm just going through these scenarios in my head. So once I can see the price action and I can identify what other traders are doing based on the scenarios I've run through in my head prior to ever getting to the news event. So I'm not reacting at all. It's just in my trade plan. And I'm simply seeing, oh, they've given me the rotation, they've given me the tick, just like right now. I would have liked it to get to 1770. I'll be patient and wait for it to get to the zone. If I can do that, it's highly unlikely I would have gotten filled at 72. Anyways, but when I see that tick divergence right in front of the zone, yeah, I'm going to cover my trade right there. I'm going to take everything off. That was essentially I was short right at 1778 on half size. I did reduce my trade size because I had to have an extra wide stop to make the trade work. And my stop, by the way, was almost 5 points there, okay? And I got almost 6 points on the trade, so I was close to a 1-to-1 risk reward, but I could not have survived that on, well, I would have survived the trade on full size, but assuming, which I have to assume, that I would have gotten pressed all the way to my stop or close to my stop, I would not have been able to financially bear taking the stop there on that wide stop. So I had to reduce my trade size accordingly with the risk that was involved, right? As it turns out, it'd have been nice to keep full size on, but you don't always get what you want, obviously, in trading world or most of life. The other way this could work out, right, is we break down here, we come back up for either a backside test right here or a backside test right here, and then fail back to the downside. I do think if the news is really negative and they use the word taper, I truly think 1730 is a possibility today. It would be a huge downside day. And I have sold some deep in the money calls that expire today at 3:15 Central Time, and so I am hoping that is sold some really deep in the money calls. So it's going to have to be a big move. If not, it's going to be a tiny loss or binary options. It's no big deal, but that's kind of how I've prepared for it. Right? Those are the two options that I'm looking at, and I'm also keeping in consideration. The first thing I would do is from the minute before. Let's say we're trading right here, right? The minute before they release the news, okay? So keeping in mind what most days look like, right? So if we come out right here, we're trading right here 1 minute before the news. Let's just call it 1772 for ease. This is what I'm doing. I'm doing at least, I'm up here and I'm at least 8 points away, 1780, right? And I'm going to come on the other side of this trade trash this for a minute. We'll do it again. 1780. And then I'm also thinking, let's see, 1764, right, will be the other place that I'm looking. That didn't straighten up its line. There we go. 76. So those are the two bandwidths I'm looking at for a possible snapback. And there's nothing, again, I'm just looking at areas of, I'm not even considering till we get to these 2 points, right? Because as I've seen from past looks, the rotation down, right? The rotation down means nothing. 4 points, 5 points means nothing in these whipsaws. And I would just assume miss the trade and not even get a chance to get filled, then get run over. And that's if I can take the trade. And we are pushing into, by the way, guys, some new lows here. I'm not quite ready to pull the trigger. I want to see us kind of jump in and get into this, the backside of this, so I can have as small a stop as possible. And I'm just not in a rush today. I can miss this quite easily. So they just try to have another push down. I'd also like to catch them on a pretty negative tick. We were only minus 400 there. And in order to get divergence, I have to stay within, let's see real quick. In order to get divergence here, let's trash this. I can still get a negative 600 or 700 tick, right? As long as it's underneath 800, but with new lows, and still have divergence print and still make that trade work. So again, I'm not in a rush. Let them come to you. It's only 11 o'clock. We have time. As a matter of fact, I don't have to meet someone for lunch, but I've done this to myself 2 days in a row. I was sure it was going to be slow right here. So I may not be able to get this trade. I may not be here when it actually sets up. So let's look at one last thing here. And let's look at, see, that was really, I think we looked at the 24-hour ES. Let's look at the 24-hour NQ. When I look at the 24-hour NQ and I look bigger picture, right? Okay, this looks like a really nice spot, right, to try to pick off some panics on the long side of the camp, right? This 34.29, 34.30 looks really, really attractive to me. Okay, but beyond that, right, if we go back far enough, I just want to kind of pull up a 24-hour chart of these, both the ES and NQ, to get an idea of what it would look like on hourly, where the support levels are, right? So let's do that so we can see. And then let's look at a 60-minute chart. Okay, so here's what I noticed right off the bat just when I pull that off, right? I want to pull in some more. How far back am I here? Not far back enough. Format, symbol. Let's go 2 years back. I guess it's less than what we had. We showed more data. Oh, okay, I see. We're back to November. Okay. So first thing that I see is this right here, right? We have to get it back above this in order to get any upside, right? And you can see there's obviously a channel going right here. And then we have this downside going right here that we need to get back above. In order to get upside, again, that brings in that 3,500 and it brings it into question. Here's that 34.50, right? And that 34.50, you can see that at 34.50, right? And again, this is without any detail, right? Just looking at it generally. You can see we paused underneath 34.50 and we backside tested it once, twice, right there. And then we broke it a third time and slingshotted back up above it. It's important that we get above 34.50, right? Because if not, the next channel where there's truly support, where we broke out from last time, is 3,400, right? And you can see that entire channel there between 3,400 and 3,550. We rejected 1, 2, 3, failed breakout, right? Rejection, finally got above it and held and took off from there, right? So you would technically say this is the launch, right? We essentially went from 33, let's call it 3,300 for conversation, all the way up to 3,500 and change. We split the difference, right? and that brings us into a 3,400 roughly for a 50 pullback. Okay, so this is an area also that I'll be looking at. So we have first this area. If that doesn't hold, then we have 3,400 just off of the bigger picture. And you got to believe that when we get into the meat of this, right, that there's going to be responsive buyers in here. I certainly hope there's some shorts left. If we have, again, this is counting that they're going to say we're tapering somehow, right? Even if they're saying we're going to plan to start tapering in January, it should cause a knee-jerk reaction, at least initially, to the downside. All of this is planning on a worst-case scenario. We could just shoot straight up and the deal be over with. Totally plausible. But I just want to be prepared for the downside. The upside is really pretty easy. It's going to have to get pretty stretched for me to want to fade it. Let's see if anyone else has any other questions. I covered NQ 24 hours. Let's look at ES on the same picture, Jess, and then I will let everyone go. I think I've done as good a job as I can preparing. Let's trash this. Let me see if there's any questions that I haven't answered. Hey, no problem. Let's take a look at, no problem, whoever just sent me the thank you. It just shows up as viewer 13, so everyone's anonymous in here apparently today. So obviously, pretty easy channel to see right here. We've clearly broken it. Let me get back to my drawing tools. Up channel. Up channel. Well, it should be a little bit higher. Let's draw it up here. All right. And we currently have this thing going on where we're right against this channel, right? So 1800, that's why I was pointing out when I was saying on the upside, this 1796-98 area right in here would be a really nice area if we could get some up to take a swing short from. It's obviously quite an extension as well from where we're currently trading, almost 30 points. I'd be very interested in looking for some trade location in that area to the short side, right? To the downside, obviously, this right here is approximately 1730. I don't know if everyone sees that, right? And the other side of that is right here at 1715, 1710 roughly, right? Those are two key areas. I'm telling you, I'm just dreaming of getting 1730. I will buy some calls here. It could look extremely nice in this area. I will try to get long if we get down here. This is the next area, and then followed by that, this is the next, this 1680 and 1700, right? Those are our next areas. I don't think we're going to get to 1700. That'd be a huge downside. And if you look on the chart, I'll print it shortly before, but I already sent it to my clients. I'll have a chart showing the 4% down and the 5% down areas for a trade. Also, this area right here, this is at 1754 right there. So I'll probably be looking in terms of downside to take shots that I'll hold swings from here. If somehow we get all the way down to 1730, I will definitely try to stick the trade from there. I'll just lay off just enough to give me a little bit of cushion once I get some upside on the trade, assuming I get that, right? And on all of this, I'll be trading reduced size because I'm going to assume that if I'm going to make an error, I'm going to make an error in the side of wider ranges and wider volatility. And I may even have to double my stops in order to stay in the trade. And the one thing you got to think about mostly if you're looking at trading this afternoon is this: how much can you afford to lose? And if you look at your days, guys, particularly guys that are coaching with me, guys, y'all have been banging down 2 to 4 points every day, right? If you look at this one day, knowing that for the most part, most of y'all are not on scales. Most of y'all are just 2 points and done, right? So the question I want you to ask in your mind before you trade is, how important is it to trade today, right? And how much would it set you back from your mental game to take 2 quick stops in a row versus waiting till tomorrow when the layups should be so much easier? So anyway, that's all I got. I'll tweet as I can once it comes out. My trades are first, my tweets are second. And I hope everyone makes a lot of money. Watch NQ. It's going to lead this thing one way or the other. It's been weak for over a week now. It has been leading us to the downside almost every single day. And I imagine if it reverses, it'll lead us to the upside. Anyway, I don't see anyone with any questions, so I'm out of here. I'm going to go grab an early lunch. And good luck, everyone. I hope everyone banks. See you guys. You can hit me on Twitter, StockTwits, or Gmail, tradeandperform@gmail.com. See you guys.